Welcome everybody, Doug McKay, anti-wallstreetguy.com on Friday, the 3rd of February 2012. Last week we started out with a weekly chart of the S&P 500 versus a daily. So we're going to start with that again today, the weekly. And basically what we were talking about is support and resistance. We thought that decent support was at 1300. And Monday of this week we did touch 1300. 1300 held. And we believe that resistance, pretty plain and simple here, is right around this 1345, 1350 level. If we look at the highs that were put in, let's say on this candle back on 715, the week of 715, the high there was 1343. The next week beyond that, on Friday, the week of 722, we're at 1347. The week after that, we were at 1344 and change. So we're right there. Again, what we think is going to happen, meaning the most highly probable scenario, is we are going to basically replicate this kind of back and fill trading range area, left shoulder, if you will, over here on the right side, building out a right shoulder. Obviously, it's possible we could go right from here in short order next week and test the 2011 highs around that 1365, 1370 before we build out this shoulder. That could happen, but the most likely scenario is I believe you're going to get a better opportunity to pull the trigger. As it stands, the dips will probably be bought at least one more time, but I do think at some point within the next 6 weeks we'll be testing 1300, possibly lower. But nobody can argue this trend. This is a very, very nice looking chart, both on a daily chart and on a weekly chart. Let's flip over to a daily chart. So there's our daily chart. Last week we ended up right around here. We thought that we would probably continue to roll over, which we did, but again, nice support was at 1300, and that's exactly where it stopped intraday on a low on Monday. Then we got above this 1325, 1326 level. Good movement today. Finally, some volume came into the market. Let's put this on a, let's go all the way out to a monthly chart of the S&P cash. So here's our lines here. We'll just kind of keep those there for next week as well. Once we got above the declining trend line around that 1265, that was our signal to get in. Again, I do believe you're going to get better opportunities here than 1344. And is it quite possible that we could top out around 1350, 1360, and that could be the end of it? Certainly. But when we do look at this chart, especially on a monthly basis, we could be looking at some type of, again, inverted head and shoulders long-term daily, weekly, and monthly chart, which could push us into new highs, or at least past 1400 sometime in 2012. But we'll see. We'll take it on a week-by-week basis in terms of the trend. Let's take a look. Let's go back to a daily chart here. Talk a little bit about gold. Right now, for the managed accounts, for the purposes of that, we are focusing just on equities. Not bonds, not metals, but we're going to talk about metals like we do each week. Everything looks easy after the fact, but certainly there was resistance here at 170 on GLD, resistance here, 170, 170 and change. So this was... And not to mention the bullish sentiment was extremely high on gold. So pullback here on gold with the strength in equities today is reasonable. Do I think we're going to probably go lower? I do. I think we'll probably fill this gap. Maybe we'll go down to 165. I don't know. First of all, no one does whether or not the 1900 and change level we put in on the futures was it. Maybe we doubled that. But right now, if you're looking to initiate a position in gold, if you don't have one, I would wait till we got a close above today's high or even Thursday's high. In the meantime, I would just let this kind of play out and see where it goes. If you're in it, if it broke the 50-day moving average, I would be out of it. That's what I would use for a stop. I think last week we mentioned just under this candle here, which is just below the 50-day, around 160. Let's take a look at bonds. Bonds could be... there could be some type of trap here. Big day on Tuesday. We did think that it would come back down and fill this gap, so we have several gaps here now on bonds here. That one was filled here. We came down. Now we've got one on the top side. We are down below the trend line, but we are above the 50-day moving average. So for the sake of calling a trend, the overall trend on the short end anyway is still long. I would be careful here, though. I'm not so sure that the bond ride might not be over for a while or possibly for good. Remember last week we talked about basis on basis when we pull up a weekly chart. And we talked about coming out of a base here. We talked about coming out of a base here. We talked about a short-term base here. Came out of a base here. This was kind of a false breakout. And then we built this big triangle, if you will, popped out of that base. The point was you're only going to go higher out of so many bases. And then the ride is over. It's quite possible that the ride is over. We don't know this until after the fact. But in any event, like we said last week with the IEF, chart looks good above 106. But if we were to break 104.40, I think was our number, we would be out. So we closed at 105.23 today. We do not have a position in bonds or in metals in the equity or in the managed accounts. We just have a position in equities. Let's take a look at a couple individual stocks where the charts look decent. This is Valero. These are not buy recommendations by any stretch, but I think if you got in them at the right levels and use your stops accordingly, you can sleep. I think if we got a close above the high that we put in on Wednesday of around 24.68, let's just call it 24.70. If you wanted to give it a little more room, maybe the high on Tuesday, 24.82, I would put my stop under these lows. But again, what we're looking for in equities, whether it be individual stocks or ETFs, or even if you have a mutual fund for that matter and you have to stick with it, is positions coming out of basis, not ones that are overly extended. Let's take a look at Hershey, HSY. I was looking at these symbols today with a buddy of mine this morning while the markets were still open. This particular stock, again, nice basing pattern here. This has no direction. So what I would do if you were looking at Hershey is I'd wait till it got above the high that it put in on Tuesday. That high was 62.20. If you own it, I'd have my stop under this candle here, the low yesterday. And that low was 60.53, but I'd keep an eye on that one. Let's take a look at Ford. Again, very similar chart. This one could almost be considered kind of a pennant pattern where we have a triangle forming. Usually the triangle breaks in the direction of the previous move. The previous move is up. If you were in this now, that would be acceptable. I would have my stop just under $12. Or you could wait till it got above the candle, the high in the candle on the 26th, which was last Thursday, and that high was 13.05. Let's see, what else do we have? Let's take a look at Marvel, MRVL. Nice chart, broke out. Could it be too late to get in this? We don't know. Kind of the point of showing you this chart today is, again, we had kind of a cup and handle, broke out, continued follow through, didn't break the area of support, and we're moving higher. There's a lot of stocks that are looking very similar to this. I have not looked at Intel, but let's take a look at Intel, see where that closed today. Nice basing pattern. Quite possibly we could be breaking out of another base. Obviously, semis are working good, tech's leading. So I would wait till we got above 27 before I pull the trigger on Intel. And then let's see, let's take a look at Alcoa. Surprisingly, a decent chart. All-time highs, way off the all-time highs. But a good-looking chart on good volume. Again, the one thing the market had today besides price, which is what we want to see, number two, is volume. So decent volume on that. All right, you guys, that's it. The overall trend in equities is long. I think you're going to have an opportunity to buy at lower prices. What we're going to have to do is, more importantly right now, I want to focus on where we're going to be selling. We want to be selling as close to the top as possible before the trend changes. I know we always talk about capturing the top, or the fat, and not looking to get the absolute top or bottom. But in this instance, we don't want to take this thing down to 13, 18 and decide it's time for a trend change. What we want to do is maybe scale out if we get a little higher up into resistance here, which could occur as soon as Monday or Tuesday of next week. Okay, that's it. Doug McKay, Anti-Wall Street Guy. We'll see you guys next week. Thanks.